So good evening and welcome everybody. It is Monday, August 24th, 2015, and this market got annihilated here today in the last 3 days. Last Wednesday, as we know, we had those Fed minutes and the market rallied up to the declining 5-day moving average and also that cluster where we had seen the 10, 20, and 50-day moving average. And at that point, we were starting to get very cautious about this market, especially because it was below the declining 5-day moving average. And as we know, the market is guilty till proven innocent while it is below the declining 5-day moving average. So as far as your question, Arlen, which is main question, will the sell-off continue? We're going to get some bounces here, but this market is severely damaged, and the bounces that we get will be, we'll see some sharp rallies. We could get as high as up to back in this point, but now we've got this prior support level just under 200 that is likely to offer resistance, as it did today, as we got up to a high of about 196 or so. We had a very volatile session. I mean, we had a bear market coming in today, a giant bull market, and then another bear market. And the question as far as will it continue to sell off? We closed the regular session of 189.55, and here's where we are in the after hours, 187.87. So in the after hours, we're down close to 2 points. Down in here, these points come and go very quickly. We were talking about it in the trading room late in the day. It was Alex was asking, if it got a kind of a little push here and then to short some weakness. I guess he didn't take the trade because he was looking for that push first. But I had pointed out, and I posted the chart right about this level, that we've got a lower high below a declining flat to declining volume weighted average price, and I certainly did not expect it to have the magnitude of decline it had there. In fact, when I had posted that chart, I have it right here actually. I thought I was late, 191.23, to post that chart there, but we had seen the market drop 3 points quickly, and then it rallied too. And this is where, again, this market is really for the most aggressive, most disciplined day traders. You simply can't spend as much time planning this stuff. You have to look at it in real time and be quick on the draw. So our gap lower this morning, we got back above VWAP in this area. It rallied up. We pulled back to the volume weighted average price, and then buying a higher, as the momentum comes back into it with a stop under here is certainly something that the higher risk traders can do. And then after these pullbacks, we don't want to buy these pullbacks because we don't know where they stop. A lot of time, we like to see them stop at the VWAP, but we don't know if they're going to get there or if they're going to just continue to go down through it. So we look at the pullbacks to a rising volume weighted average price, and then we look to buy strength and set our stops. So it did end up here that buying the new high at this point did make sense. It had broken that level and tested it, held as support, and then we saw some choppy upward action, but really it kind of fell apart after about 1:15 p.m. Eastern, and we just saw this market really unfold further. So when we look at a weekly chart, you can see that I've drawn a couple trend lines in here, one from the 2009 low, and then this one from the 2011 low to last year's fourth quarter pullback. That trend line was obviously broken. Then we look at where we are in terms of last year's fourth quarter pullback. We came very close to that, within a few cents of it. Now, one possible scenario is that we do flush below this low from from today, and just get briefly below this level. But again, if you're going to be trading this on the long side, you've got to be aware that you're going against the direction of the 5-day moving average, which makes it that you should be only taking long side trades as day trades. And once we get below that volume weighted average price, and once we start breaking the pattern of higher highs and higher lows, you got to get out of there quickly. this market is going to continue to show a little bit of volatility before it settles down. We've got some massive gorillas fighting out there, and we need to let the dust settle if we're going to look for swing trades. If you want to play guessing games and figure that, hey, this is a good value, and that you feel like, well, my risk is maybe below 180 and you're going to buy it at 184, let's say, then, that's a different game than what I'm trying to teach you guys. In fact, that's a game because it's a guessing game. What we're trying to do is look at this market as objectively as possible and get the hell out of the way when it breaks this support level. And yes, you could look at it and say, well, shouldn't we have been short? And, some of you were short. We had some stocks that fell apart nicely last week. But again, as I mentioned, the short side is much more difficult, especially when you have it declining as much as it has. And the questions that I ask myself each day, and I truly do, I mean, this is written down right here on my desk and taped to one of my monitors, is two things. On one side, I have, did I help people make money? Two, did I help them avoid losing money? Three, did I provide education? And four, did I provide a positive environment? As I always say, number four is my weakest spot. I think I've helped a lot of people avoid losing a lot of money. Some of the ideas I suggested for bounces, if you got involved in them quickly, maybe you made some money. And the education comes very naturally and easy for me. On my personal side, I have another list of questions. One, did I take smart trades? Two, did I hold my winners and scale out? Did I cut my losers quickly? And four, did I control emotional responses? Those are what I need to work on. Those are my things. You should have similar reminders on your screens as well. But the S&P 500, it's broken. I don't know where it's going to continue down to. I think an obvious level to be aware of is this low from last year. We'll take a look at that. The fourth quarter of last year, that is, 181.92. Today's low was 182.40. So we came within 48 cents of that fourth quarter low from last year before the buyers stepped in. And maybe tomorrow we undercut today's low. It's a far way off, even from here, but it's not unrealistic to think it might do that. Look at how this market never got above the 2-day volume weighted average price as well. Let's take a look at the Nasdaq. It was down big, obviously, as well. We've got a lot of damage done in here. We're below all those moving averages. We did undercut last year's low. And in fact, if you take a look at it, we came down to the trend line that's been in place from the 2009 low that we had seen. That trend line was then tested again in 2011 as it pulled back, and we came down to that level today. Just an amazing distance that it traveled lower here today. And as I say, almost every single day, risk management is job number one. If you want to play guessing games at trend lines, that's fine, or prior levels, but that's not that's not the method that I'm teaching here. I'm teaching us to be safe. It's possible that we do come down even to the lows of last year. The 2014 lows are within what's getting to be a lot more reasonable striking distance. 83, it sounds insane, that's 15 points lower, but our low today was 84.74. The low last year was 83.28, so we came within $1.50 of that. My suspicion is maybe we do get some further. I don't want to make predictions. That's the thing. I say it all the time. We're not in the prediction business. We're in the anticipation business. We want to anticipate. We closed out the after hours with at 97.84, or that's where we are now, I guess. So we dropped nearly $1 in the aftermarket. That's where we are right now, 97.84, and we've got the same thing here. This market made a spectacular rally, and then these lower highs and lower lows continued up till about over here when it broke back down through daily S1. Not quite as much selling into the close in the Nasdaq, but still tremendous amount of damage done here. And our bigger levels of prior support are likely to become resistance when we do get bounces. And we'll see how far those bounces go. But the most obvious level for the potential of resistance is near about that 105 to 106 level, and that's a spectacular distance away as well. So there are opportunities, but again, it's not something that we can look at today and plan for tomorrow and say, here's what I'm going to do. We can look at levels and say, perhaps getting down in this level, it finds a little bit of support. That's possible. And then, maybe look for strength to buy if it gets above tomorrow's volume weighted average price. But there are so many moving parts, and these parts are moving so rapidly that you really can't expect to plan for it the next for the evening before. You can be aware of overall strategies, but it's like jumping into a current that's going 20 miles an hour. You're going to get carried downstream in whatever direction that current is going, and that current is going to change directions on a whim. The Russell 2000 was actually we had come very close to coming positive in here today, and so we had a spectacular rally. The lows down to 108, up to 114, and then back down to 110 and 110.55. After hours, where are we right now? Let's take a look in here. We're at 109.60. So same thing here, down about a dollar or so. And let's see what the market gives us. We simply can't say I'm going to do this or that tomorrow. It's just the moves are too big. Semiconductors did go positive for a while here today, which they had gone positive and stayed positive for about an hour and a half, 2 hours. But this has been, as we know, the group that's led the market higher in the past and leading it lower, that in the Russell 2000. So we came down through last year's fourth quarter lows in the semiconductors. Again, just a spectacular decline in terms of the rapidness of it and how far we traveled. We closed above that level, and here after hours, where are we? We're at 45.70 versus a close of 46.05. So 45.70 just puts us really right to about here. So we're not breaking below the afternoon lows. I think that, again, the semiconductors kind of led us higher, and now, it's still possible, and it's actually surprising that we didn't come down and test this trend line from 2009, given how hard the Nasdaq got hit, and it did come down to that trend line. So we need to let the dust settle is the real bottom line here. If you're an aggressive day trader, there is tremendous opportunity, and that opportunity obviously goes both ways. If you're not being disciplined about it, if you're just guessing where lows are and not waiting for evidence, and you don't have your stop places, then you're going to get what you deserve. You have to look at it methodically and say, I'm going to buy some strength after a pullback and set my stop underneath the pullback low. That's all we can do, is to control the risk and be disciplined about our entries. Biotechs were down 4% or so today. This group here, if we look at some weekly time frames, the 2009 lows, the biotechs took a while to get going, but then once they did, they really outperformed, in particular in the last year and a half, 2 years. This group, we can draw a trend line off of here as I have, and then we would say, the next important low, we could take that trend line and see where it hit here early last year, and we hit upon that once again today. So big rally off of those lows, of course. We were down at to 85-ish or so, and rallied from there 65 points. I mean, just insane moves. But at the end of the day, we finished on a weak note here, below the volume weighted average price, and we've got the tick chart. The tick chart is showing that we ended 317.89 is where we are in the after hours. So 317.89, we're down here. So you've got to decide whether, the risk is worth it going in. I'm not going to, someone had said to me today, Brian, is the S&P 500 going to hold the VWAP? I said, no idea. I don't have a crystal ball. And if it holds there for a little bit and then had it broken here, maybe it would have been a good buy opportunity with a stop underneath this level. But you've got to decide. I'm not here. I can't tell people what you should do. I don't know what your personal situation is, but I can say as a general policy, we're in for a lot of volatility, and if you don't know what you're doing and you're not being disciplined, you're going to get destroyed. So let's take a look also at we'll look at the financials just because they they got smashed here as well today. If we take a look at this horizontal line, their low came down to this little levels from 2013, and what's to say they may not drift down towards this 17 to 18 level in the next couple months. It's certainly possible. These markets are broken. If you're going to be trading the long side, they have a lot to prove in order for you to think that you can hold them for anything more than a day trade. The shares of Apple were briefly positive as well today. They were. Let's take a look with a 2-day chart so we can just frame it. You can see that we got above the 2-day volume weighted average price. We rallied right to the 2-day volume weighted average price, pulled back, made this low, made a higher low, and then blasted through the 2-day volume weighted average price and rallied another couple points from there. And then we saw it breaking down and losing the volume weighted average price, of course, later in the day. And after hours, where are we right now with Apple? So we closed the regular session at 103.12, and we are at this tick chart is computing a lot of data. We are at 103.24. So Apple's holding up after hours. And under 100, is that the magic number for Apple? I don't think so. I mean, again, even during this decline, we saw some horrific declines, and every time it did that, people ran in and thought that it was the low because it's Apple and it's a great company and we own their iPods and their products. But these are let me draw this better. These are lower highs and lower lows. Here's a correction through time, and then it broke down, which should be expected. It's got this declining red 50-day moving average, lower highs and lower lows. Let that 50-day moving average at an absolute minimum flatten out and begin to rise before you start to think about this as anything more than a day trade. So there's just no reason at all to be a buyer of Apple. I've been saying this for months, and sometimes people say, hey, but it's Apple, I'm going to buy it and hold it. And I say, good luck. And when I send an email that says good luck like that, I'm thinking that person has the capability that they're going to get destroyed here, because we don't fight downtrends, and the stock is in a downtrend. It doesn't matter what the company is. As I said Friday, blue chip is nothing more than a marketing term. Look at shares of Walmart. I mean, come on, this stock is the bluest of blue chips, right? It was breaking out past resistance last year. From that failed breakout came this fast move lower. Some stocks to keep an eye on for tomorrow with no specifics. I would say keep your eye on Apple. It could bounce further from here. It's showing great relative strength in the after hours. What are the levels? I simply don't know. It changes too quickly. Facebook, this one came down to to a very important level. The highs from the first quarter of 14, and then became the support here in the second half of 2014. We had grinded higher this year and just got obliterated. So down towards this level, obviously, this is looking like the most important relevant low right now. But what are you going to do? Buy it at 82 and set your stop down at 72? To me, that just seems insane. So it again is another stock like all these that, let's look at the after hours here. This stock is broken. It's going to need time to heal. And everyone thought that, so 82.15 is where we are after hours. So that's holding up. It's actually up a little bit. But it's no different than if you remember a year or two ago, whatever it was, everyone was saying, which one's going to be the first to 100? Is it Twitter or is it Facebook? And people love Twitter. And we've been talking about guilty till proven innocent with a declining 50-day moving average, that it was likely to undercut the IPO low, and it did so, and it's still a piece of garbage, just like Alibaba undercut its IPO low pricing of $68 a share, and it's still a piece of garbage. So, you've got to look at these things and say, okay, what if the semiconductors bounce a little bit? They've been beat up the most. Do you want to play the SMH, or do you want to go and take a look at a stock like Intel? Intel's got tons of liquidity. It didn't have as huge of a range today, which is actually a good thing if you're trying to trade this. The range was only 10% in this stock today, versus, we saw some stocks rally 20% off their lows. So, this is a stock that I would say that maybe you keep your eye on that one, and maybe you keep your eye on Walmart as well. It is a blue chip company, supposedly, and again, that's a marketing term. But think about the unsophisticated buyers who purchased as it got above that 50-day moving average. And as I always say, a declining 50-day moving average means the stock is guilty till proven innocent. If they don't scare you out, they'll typically wear you out as it goes sideways. But the danger is that the trend continues. And in this case, obviously, the trend has continued in Walmart. We came down to the 2012 first quarter highs, and perhaps this is a level where we begin to see some support found, but there's just zero evidence that any of these things are ready to be bought and held onto with any confidence whatsoever. Couple questions from the emails. Let's do that first, then we'll get to the questions that you guys have here in the questions and answers box. First, excuse me, first one is, where are you getting the advanced decline line chart that you pull up from time to time? Is it your videos? Is that in your videos? Is that TC2000? It is not. And I don't know if they have a similar one in there. I haven't looked. It's part of Realtek. I have the platinum version. I'm not sure where to find it. I think looking at it graphically helps me more than numerically, and I agree. That's why I look at it that way. What I'm going to do in the next 2 weeks. And by the way, I am still switching over to TC2000. They're coming out with I just had email, excuse me, correspondence with their CEO today, and they're looking to push out their new version this week, which is version 12.4. I'm sorry, 12.7. This is their first. So as he says, as for version 12.7, I'm really hoping to get you something in the next couple days. I'm pushing the developers as hard as I can. They've been busting their asses, but there are more loose ends to tie together than we expected. This will be a major release for us, since we've not promoted a major upgrade in over a year, which was version 12.4. Lots of exciting announcements ahead. And what we also discussed in this email today was that we're going to do a joint webinar. That is that I'm going to set it up with them to do a webinar for Alphatrends people only, and that is through TC2000, and they'll be able to answer all that stuff. Their main instructor, Michael Thompson, I've met him at a trade show 8 to 10 years ago the first time, and I've kept in touch with him over the years. He's the reason, he's the guy who helped me get volume weighted average price into TC2000 and short interest, and he's just a fantastic instructor, so he'll help with that. And I will definitely give you guys plenty of heads up before that webinar is actually goes through, so you'll have a chance to get involved, and I will record it as well. Excuse me, Frank has a question here that says, Brian, was 186.32 price crossing above VWAP the perfect entry place today? And I would say yes, that would be the perfect entry place. And second best at 189.40, and yes, that's what I've drawn out here. And again, those are, I had put these in the trading room, saying that, someone was asking me about should we buy above the high of the day, and I said you don't want to necessarily buy those highs, but after a pullback as it begins to get going once again. So was the second best 189.40, and that's the level I pointed out. And yes, right here. So absolutely. I generally want to wait for higher highs, but you indicated it was too late. Your thinking, please. Well, it's not that it's too late. Obviously, you could have made money, but the point is, look at how far it had to travel to get to that high. This high right here is 191.15-ish. Buying at 189.40, as you said, that's almost 2 full points higher. In this case, if you buy here, your stop was down here. Maybe as it got moving, you raised it to this level, but you don't want to wait for the new high. We talk about that, on the daily time frames all the time, that we don't want to buy the new high. We want to often, if we get involved in it, we want to sell a little bit into that new high. If we're buying as it gets, above this level right here, then we generally want to sell a little piece right there, and then raise our stops on the balance. We don't want to be the guys who chase it after it's just gone from 187 to 191. Even buying here is $2 off those lows from 5 minutes before. So hopefully, it's not that it's too late, Frank, because obviously we have hindsight here, that buying there wasn't too late. But the question is, as always, regardless of whether you're a swing trader, whether you're day trading aggressively, where has it come from? How much energy has it expended getting to that point? And where would your stop go? Where's a reasonable place for a stop? We don't want to buy the new highs. We want to buy after a pullback begins to stabilize, get moving higher, and set our stop underneath the most recent relevant higher low, which in that case would be right there. So good question, Frank, and hopefully that clears that up for you. Those are all the stocks that I have to cover. Those are all the emails that I have. So email is off. I'm not looking at emails. I'm not looking at Twitter. The only place I'm looking currently for questions is here in the questions and answers. And let's see. Brian, would you analyze the materials sector? Thank you. And I think that, what is that? It's not XHB. That's the home builders, right? Yeah, so what is the materials? I don't even know what the materials are. I don't think I've ever traded them. So if you could give me the symbol on that, then I will do that for you, Arlen. But I don't know why you would, or I'm sorry, what it is. And then Arlen's got another question. Can you explain why these entry points? I don't know what you mean more why. I would say that this is being recorded. Perhaps you go back and take a look at it. But if you have a specific question, Arlen, I can certainly help you with that. On the SPY chart, yeah, if you have it, I think I just covered it, but if you have a specific question, I don't know what else to answer. So XLB is the materials, XLB. Let's take a look at those. And if you have a question that you can really hone in on for that SPY, then I'd be happy to answer it. XHB, let's take a look. Like everything else, it's broken severely. The building materials, let's take a look at since the 2009 low. Let's take a look at our trend line here. You can see that was broken, and we broke below these, this prior little area that had the potential for support. And where are we now? Let's look at today's low versus where we've been. So we'll just draw a horizontal line across and say that this is the low today and this is the close today. So where we came into, when you look at it that way, you look at it and we came into this prior band of resistance. And that prior band of resistance looks like it's holding as support. So the question is, though, how do you buy it? It's got a low in here of 39 and change today, and you've got this 2-point band of prior resistance that has the potential to become support. Let's look at a 30-minute time frame. It's guilty till proven innocent, like everything else in this market is right now, below a declining 5-day moving average, 41.33, and on a 1-minute chart, we've got the same exact type of look. Maybe tomorrow back above here you get going. I can look at it, but I don't know what you want me to answer for you. So there's my look at it. If you have a specific question, I'd be happy to help. But more specific questions are better here. By the way, Michael says the advanced decline line is available for TC2000, and the symbol is $ NYC. I'm sorry. NYAD, $ NYAD. Let's take a look at that. Oh, it's doing a, what's going on here? $ NYAD. So there's advanced decline. That's what it looks like. It's a little bit different than the way I show it here. So here's the advanced decline, and what it's doing is just building cumulatively. It's the advances minus the decliners. So it's not like the one that I use for Realtek that shows the amount of advancers and decliners. Eddie's saying, what's the best 3 time frame combination if I'm looking to hold a position for a 2 to 3 week swing? Eddie, identify it on the daily time frame. Identify your opportunity on the daily time frame, and then look at identify it on the daily time frame. Determine your risk reward on a 30-minute time frame, and use your 10-minute time frame to find 10 minute and down to fine tune it. That's a very basic principle that I teach in the classes, including that beginner course that I just taught. So Arlen, again, can you explain more why on these entry points? If you can be more specific, I'd be happy to, but I thought I explained it pretty thoroughly. Be a little bit more specific in your question, and I'm happy to expand upon it. How about GLD? Well, gold is, it's still in a downtrend. I mean, we've been in a downtrend for a couple of years now. And again, if they didn't scare you out, they wore you out in here. And, where are we right now on the daily time frame? Let's take a look. The, shares of GLD are right back up to this prior band of support. It's just come from 103.5 up to 112. So it's just rallied 9 points, a little more than, let's say, 9.5%. It's just rallied 9.5% into a prior level of support. So where has it come from? Up 9% in 3 weeks. Where does it have the potential to go before it's likely to find a source of supply that will bring the momentum back to neutral or turn lower from? And we're basically right there. So I don't see any advantage to trading GLD right now. NYEA is the advance, and you can plot them both on the same chart. So that's good information, Mike. Thank you. So NYAD, $NYAD, and NYEA is are the symbols for the advancers and the decliners, or actually the decliners and the advancers on TC2000. Thanks, says Simone. So other questions. I have 0 questions in the queue here. Is the VIX likely to stay elevated? I don't know. I would say no. I mean, look at the spikes in the VIX. They seldomly, we had it elevated here for a while. The answer simply is I don't know. As I have said consistently for a decade or more, that the VIX is the most misunderstood financial product out there. And even worse is this garbage they come up with, such as VXX, that that it's garbage, and there's no reason to be involved in these things. So I expect, Ken, that we will, for at least a week or so, continue to have an elevated VIX as this market searches for stable ground to sit on. That we're going to see a lot of volatility. So to me, volatility, the VIX is not something to use for timing, really. Again, I think it's the most misunderstood financial product that's been invented. Do I ever refer to trend or put to call ratios? Never. I simply don't. I look at price action. I don't want to look at that stuff. It just does more to confuse than to help. So, Michael, the answer is no there. on your SPY chart, there are two entry points after pullback. So Arlen's getting more specific here. The first is because it goes above the VWAP. What's the second reason? The second reason is because we have an advancing volume weighted average price. And for day trades only, we're still below a declining 5-day moving average. So to think that you can buy this and hold it for a swing trade, in my mind, is not an educated assumption. So what we would look for is we want to be buyers while the volume weighted average price is advancing. We don't want to buy pullbacks, because if we decide this is where the pullback is at 189, well then 5 minutes later we're down at 187. So after the pullback with a rising volume weighted average price and it begins to show strength once again, we want to buy strength and set our stop underneath the most recent and relevant higher low. So again, after this pullback, you could say, well, that pullback came to this prior resistance, which held as support. So are we comfortable buying right here? These are where it makes sense to be buyers, at these points after pullbacks. Now this one, not so much, because it just made a lower low. So I wouldn't suggest buying on that one. But again, it's the same concepts we talk about when we're talking about swing trades, that we don't want to buy when it's extended. We don't want to buy as it starts to turn sideways. We don't want to buy pullbacks. We want to see it find a very short-term level of support and then buy strength off of that. So hopefully that can clear that up for you, Arlen, or if not, please continue to go forward with the questions. And this was where we were talking about it as here's the lower low with a flat to declining volume weighted average price. That was the chart that I had posted in the trading room. And again, I didn't even take that trade. So I'm not saying that it was the perfect trade. It might have been for someone. I did not. So you've got to do what you feel is right for you at the moment. You can identify these and nibble on them. And I would say that, especially if you're newer as far as day trading, that if you're going to be day trading, first of all, you don't do it on a day like today when the stakes are so high. But if you are, trade 25 shares. Trade 25 shares. What would a setup in this environment look like before entering a short swing trade? Well, it would have to look like some of the stocks we identified last week. Like DECK, AKRX. These were now what are we looking for? We need consolidation. So what we generally want to look at is we want to either be short on that, avoid this little rally, and then, so this is DEC, and we spoke about this at length numerous times last week. As it breaks down and makes lower highs and lower lows below a declining 5-day moving average, that's when we want to get short and put our stops above above the higher highs. Above the higher highs, lower highs rather. So this was where I had suggested getting stopped out of DECK on Friday. Woulda, coulda, shoulda held, and another 10% on the downside. So it would have to look like that, or it would have to look like AKRX, that we want to see a stock that's in a downtrend. It gets hit, it rallies up, it turns sideways. We look in here at the shorter term 10-minute time frame, and we look to enter as it shows weakness below a flat to declining 5-day moving average. So it's the same setup in this market as it would be in any other setup market to look for a swing trade entry. I don't want to initiate a swing trade short down here at 189 when it just came from 212. That doesn't seem like good odds to me. So if you're not seeing the swing trade setups, it's the market telling you that they're simply not there, that it's time to either sit on the sidelines in cash and wait patiently for those setups to present themselves, or to switch to a shorter term time frame and switch to the mode of short-term scalp/day trades. And it's simply not part of what Alphatrends is all about, to call those trades out. Again, as I tried to explain in the trading room today, buying in here is a very fearful thing. And if I say, hey, I'm buying here, first thing I get is 4 questions. Well, what about this? What about that? What about that? And I'd like to answer that, but when you're in real time and you've got this stuff with real volatility, if you have to ask the questions at that time, then you probably shouldn't be involved, is my true thinking. And I don't mean that in a disrespectful way to anything. It's a difficult endeavor, day trading. And if you haven't been good at swing trading and longer term trading, you've really got no business going down to day trading. I think that my message has been very consistent with that. Would you have shorted the SPY below the first lower low at the SPY highs today with the stop below the recent, well, above the most recent lower high? I did not, so I can't say I would. Or you might be saying right here, would I have shorted there with a stop here? I didn't, so I can tell you that. But at that point, it's still above the VWAP, so I probably would not have. I would have been, switching from a mode of, okay, the market's been rallying, now it's turning more sideways, let's see in here, and then bearishness underneath that VWAP. Let's see, the one you on your spot. Okay, let's see. Can you talk more about what made you suspect the stocks you picked might bounce from them having sold too far off? Well, only that they are, institutional favorites. So you're saying Apple, Alibaba, and Facebook. I don't remember. Did I say Facebook? I may have. But Apple, it's the go-to name basically for institutions, because they're basically kind of brain dead people that are saying, well, what's a good company? I'll buy that one. It's down a lot. It's really kind of that simple. That's where money goes first. And Facebook has had great relative strength to the market, so it seems like a good one. And then the Alibaba was on our list because, what we often see is that a big, heavily watched number such as 68, if we gap below that, and that's where all of the IPO people were losing money, and we get a flush out below it. So we gap down more than 10 points in there. I don't have anything more specific than they are, they've sold off a lot, and they are kind of, the institutional names. They trade massive volume. So if you get involved in it and it starts moving against you, then you have the ability to get out quickly with a lot of shares if you want to as well. So Todd, hopefully that answers that question for you. Let's see. Michael is asking, would you have, so the question was, or wait for the one-day VWAP and go short below the next lower high? Yes. So, I apologize, I didn't read the rest of your question. This was, in fact, where I had pointed it out as a short, that I'd said in the trading room, lower high and lower low below a flat to declining volume weighted average price. And as I say, I didn't take that trade, and I don't tell people what to do. I'm simply saying, here's the information, look at it and decide what you want to do with it. I'm not perfect, so I give you the opportunities where I think they are lower risk. That's simply what I'm looking to do. So again, we're out of questions. Perhaps it's time to end the webinar because we don't have other questions. But if you have a question, then please shoot it in right now. Otherwise, we are going to end here in the just next moments. Thanks for the answer and straight shooting. Michael, there's no way I would not shoot straight. That's the way I've built my reputation, and I don't have all the answers. I don't tell people what to do. I'm not perfect. Why would I tell anyone what to do, especially when I don't know what your objectives are, what your risk tolerance is? I think I have less risk tolerance than 99% of the people in the trading room. Sometimes I'm astounded by the ways that people make money and know what's right for you. If you know what's right for you, then it's easy to stay disciplined and to ignore the noise and to put over the other people's opinions and just say, hey, these are opinions. I've got to trade according to what works best for me based on the person who knows me best, which is myself. So Michael says, today was a good day. Thanks for the continued guidance. Thrilled to hear that, Michael. And Sean says, because of you, I made great money today. Awesome, Sean. Thrilled to hear that. I know you caught that weakness last week on the gap lower too, so sounds like you're doing great. Eddie's saying, can I use the 30-minute instead of the 10-minute for a trigger? I find it difficult to use the 10-minute. Well, you're going to get more precision on a 10-minute time frame. But Eddie, I'd say those are the guidelines that I teach. I'm not here to tell anyone you have to use the 10-minute time frame instead of the 30-minute time frame. Do what works best for you. If you see it more clearly on the 30-minute time frame, absolutely, that's what you should be using. Personally, I think that the 30-minute down to a 10-minute, I can see a lot more on a 10-minute, and I go down to 5-minute and 2-minute and 1 minutes. Those are the three indispensable time frames in my mind, but it's not just about using three time frames. Hal's saying, you mentioned Apple, Baba, and Facebook is bounce candidates. Wouldn't Google and Amazon be better because they're still above moving averages? The fact they still have some rising moving averages indicates strength. Google is a very difficult stock to trade. A $600 stock is incredibly, I've never had good success trading it, so I didn't mention that one because I figure if it's difficult for me, it's difficult for you guys. But, if you want to trade that one, by all means, there were great opportunities in there. And what was the other one? Hal said Amazon. Amazon, same thing. It's this massively priced stock, but it's also failed. I mean, look at these things have failed. They have, all of these people who bought after that last earnings are trapped. They're all losing money, and now pretty significant money. So I go with the ones that I think are best, but Hal, if those ones make most sense to you, those are the ones that you ought to be looking at for sure. Sorry, in order to better understand the entry point, can you show it on today's Apple chart? Well, again, it's like any other chart. We see a rally, and we don't want to chase this rally. Yeah, you could have made money right there, but instead it pulls back. It's got a rising volume weighted average price, so you might have been looking at it saying, hey, you know what? I'm going to buy here. It's showing strength. It's above a rising volume weighted average price. I'll set my stop under here. It makes another move, and it pulls back to the prior resistance, and it pulls back. It begins to rally again. This would have been the place to purchase with a stop under here, and maybe you got stopped out, and perhaps you got back involved right here with your stop under this level or your stop under there. So until and even buy right here with a stop under there. But as soon as it makes the lower high and then lower low, then you have to look at it and say, okay, now that uptrend looks like it's over. It's turning more sideways, and now we're in a stage 4 decline. So, Arlen, I hope that answers for that. Todd is saying, the semis were the strongest today, relatively speaking. Do you take a stronger look at those tomorrow than normal? I don't know if you were here at the beginning of the webinar, Todd, but I was mentioning that, yes, I think that, that these are a possible candidate for a bounce, and I would take them more seriously, certainly, than something that hasn't been sold off as hard and didn't show the type of relative strength that it showed today. So yes, absolutely. It was, and I mentioned that in the midday video as well. The semis were down 1.5% today. The S&P was down 4%. The Nasdaq was down 3.8%. Russell was down 3.9. The biotechs were down 4.4%. So yeah, there's on a very short-term basis, there's some relative strength. And as I mentioned 2 or 3 times, they led on the way up, and now they've led on the way down, and now maybe they're going to be the first to bottom as well. They seem to be a little bit of a step ahead of the rest of the market. So absolutely, I'll take a little closer look at those than tomorrow. And that's why I had mentioned that a candidate for tomorrow would be something like Intel. So if you missed the beginning part of the webinar, I would encourage you to go back and listen to the recording once it's up in the next half hour, 45 minutes or so. Okay, other questions? I'm not seeing any others, so I'm going to assume that we are done, and I've got a couple of thank yous. You're welcome, guys. Thanks for being here and trusting me to navigate you through this stuff. It's difficult times, and if you keep things slow and disciplined and stick to a system, you're going to miss trades, you're going to miss opportunities. But I can tell you that I would guarantee some of the people who have been in the trading room recently and told me, hey, I made all my money with mean reversion trades. How come you don't mention those? That guy probably got annihilated the last couple of days. And I never want to see that happen to people, but the principles are below a declining 5-day moving average, you simply don't want to be long. So, except for very short-term trades. So looks like that's it. Thanks, everybody, and good night. Talk to you tomorrow.